I have been trading this exact scalping strategy for nearly 2 years profitably, and in this video I will go through step by step on how you can trade this strategy in the exact same way I do. And at the end I will go through a real life example that has happened recently so you can see how to do it in real life charts. Now if you want proof that I trade this strategy profitably, if we go down to my Discord server, which is the top link in the description, as you see, there is a channel where I post all my trades live as they happen. And if you go back on this channel for years and years and years, I've posted every trade I've ever taken live. I have funding proof certificates, everything like that, where I passed accounts just like so, as you can see here. So top link in the description, join and you can see this for yourself. So let's get straight into the charts. So the first thing that I need to see when trading my scalping strategy is I look at the daily time frame. Now, why do I look at the daily time frame like so? Well, I want to find a daily bias for the day, because when you're trading scalping, you're on lower time frames and they move very rapidly all over the place and very weirdly high volume, and it's very difficult to get an overall picture. So when I'm trading scalping, I like to get a daily bias, which is basically where I think price is going to go for the day, because it allows me to ignore all the mess and just high volume just mess all over my chart, and it allows me to very clearly focus on what I am going to be trading for the day. So with the daily bias, let's say I get a bullish one, I am only scalping in that direction. So if I get a bullish daily bias, I'm only going to be going for longs when I drop down to the lower time frame, and if I get a bearish daily bias, I'm only be looking to sell in the lower time frames. Now this is very simply because it allows me to get rid of all that high volume just mess on my chart, so I can really focus down on where I think price is going to go. Because if we drop down to the 1 minute, and you see on the daily have a nice uptrend on Euro USD, if we drop down to the 1 minute, we just have this mess all over our charts and we can kind of get a clearer trend. But it really allows me to think, okay, although it's giving me sell setups, where do I think price is going to go over the next 4 or 5 hours? Well, on the daily and the higher time frames, price is showing me it's going to go up the next 4 or 5 hours. So I should only really be trading for bullish positions on the lower time frames. So that is why the daily bias is so important. So how do we get a daily bias? Well, we just go on the daily chart and we just have a look at price action. Now this requires you to have a little bit of common sense about what price is doing, and having a bit of common sense and learning about chart patterns and trends and confluences and stuff like that. And if you want to learn a bit more, I have posted guides on my channel of full guides to every confluence you need, and as you see I'll be using a few of these confluences in the video that you might want to learn more about. So I'll leave that top right hand link in the corner for you to watch after this video. But so for daily bias, price is currently at this point. Where do I think price is going to go? Well, if we zoom out, we are moving in an uptrend, so most likely we're going to be continuing that bullish trend. As you see, we have higher highs and higher lows like so, forming a bullish trend. So that is one thing we could look at, is we're moving bullish. If we zoom in closer, you can see price actually had a liquidity sweep under this low, then continued up, which is actually a very good confluence for bullish, because we tried to push lower, swept the liquidity, but price wanted to push up even higher. And after we swept this liquidity, we can see that price actually broke out of this previous high to form new bullish structure. So we formed a higher high, and after we broke out, we then came back down to retest into this kind of support zone or order blocks down here. You see we had an order block in this bullish candle, and we retested very nicely off this order block with a wick twice actually. So we had a higher high in the bullish trend and a retest. Now we're in the retest. I expect price to be bouncing off this retest and continuing up higher. So because of all this put together, my daily bias for this example is going to be for longs. So my daily bias is a buy, and as you can see, I found this just by zooming out on the daily chart and piecing together price across a longer period of time, and then zooming in on a shorter period of time to see what price is really doing. So that is how you find a daily bias, and I hope you understand why we need a daily bias. So now we can start on the actual scalping strategy. Now the first thing I want to look at is I want to go and find areas of liquidity, because the first confluence of my strategy is a liquidity sweep. Now, a liquidity sweep is what we want to see when we're starting a trade, because we only want to be trading when there's manipulation. Because when we're trading lower time frame, we just want to catch big, high volume moves in maybe 30 minutes and just get out of the trade. So when we spot manipulation and liquidity grabs, that is when we want to trade, because the market is moved by liquidity. So we need to wait to see liquidity being grabbed and this manipulation being formed before we can then go for our trade. Now, to find our areas of liquidity, very simply for this strategy, I will just go on the 1 hour time frame and draw the highs and lows, because 1 hour highs and lows are big areas of liquidity. So once again, I'll drop down to the 1 hour chart and I will draw out areas of liquidity. So areas of liquidity are just previous highs and lows. So we go back and we want to draw a few below price and a few above price. So we had a big area of liquidity under this wick, which we just recently swept. We also have an area of liquidity above this high up here, and also above these highs up here, and so on. And we can keep going up and up and up. But also below this, you see we have areas of liquidity below this low and below this low. And obviously you can keep going left and left and left. This one would like to draw to the right place. Okay, never mind. There we go. So previous areas of liquidity on the 1 hour time frame basically just means highs and lows. Now, as you can see, if you actually look back on price, anytime price goes below one of these lows or above one of these highs, price usually reverses and forms a liquidity sweep. As you see, price had highs up here, we took it, went reversed. Price had a high up here, we swept this liquidity, then reversed. Price had a low here, we swept this liquidity, then reversed. So these areas are very key, because every time price comes below a low, usually it comes straight back up, or anytime price comes above a high, like so, it usually comes straight back down. So all we want to be seeing is price to be pushing below one of these areas or above one of these areas. So as you can see in this area down here, if I draw it out, that is an area where price has swept below liquidity. So that is an area we could be looking to trade, because that fits our strategy. So after we see this area of liquidity being swept, we then want to drop down to the lower time frame. So once we have done on the 1 hour time frame, then we can drop down to our 1 min time frame. And this is the exciting bit that I'm sure you are waiting for. This is how we can then trade. So if we go to our area that we saw on the 1 hour chart, this area where we swept below this liquidity, I drew a blue box to help us find it on the 1 minute, but this is where we could be looking to take our trade, because our first confluence of the strategy has been hit, and it is a 1 hour sweep of liquidity. And also this is a bullish sweep of liquidity, because we swept below a low, which means price could be pushing up. And also this is in our direction of our daily bias, which was to go for longs. So this strategy is actually, or this trade is looking very good for our strategy. So if we drop down to our lower time frame, and we see in our blue box, this black line was where we swept the liquidity, and we swept it at this point here. So the next thing that I would be looking to see is a 1 min change or energetic move from the liquidity sweep that ends in a change of character. So this is quite complex technical terms, but basically if we had our liquidity sweep here and this black line, and we came back down and we swept this area of liquidity below here, and we were formed maybe some structure like so, all this means is once we sweep this liquidity under this zone, so we have lots of resting liquidity as we have stop losses below here. Again, if you don't understand the concept of liquidity, I've made a full guide that I will leave top right hand corner of this video, which you can click on now if you don't understand it, and then come back to this video. Hopefully you do understand it. So once we sweep liquidity, we want to see an energetic move that ends in a change of character. Now, a change of character, again, if you don't know what it is, it's when price is trending in one direction and is formed, let's say in this example, we have a downtrend, so we have lower highs and lower lows. It is when all of a sudden price comes and breaks a previous lower high and it starts to reverse the trend. So this here would be our change of character, because it is our first sign that our bullish trend and our bullish structure is not being respected. So that would be our change of character in the bullish direction. Now, an energetic move is very simply a move that doesn't take many candles to get there. So instead of price, let's say, just completely consolidating like so, and price would very slowly creep up, very, very low momentum, and finally change character here. We don't really want to be seeing anything like that. We'd rather our energetic move pretty much just be like this, where price is very low hesitation to swept straight up above this high as soon as we've swept liquidity, because this shows that our liquidity is being respected and it is fueling the market to go up, which is where we'd be looking and we'd be thinking, okay, this liquidity area has been respected, so this is our change of character, so our trade's going well. So all of us, this is pretty much all we want to look for. We want to be looking for something like this, liquidity being swept, and then price changing character above a previous high, like so. And at this dash line would be our change of character. So that is basically what this confluence means broken down. Now, what energetic also means is we want to be seeing a move that creates imbalances. Now, an imbalance can also be called a fair value gap. So somewhere in this energetic move, we want to be seeing a fair value gap being created. So let's say we had a fair value gap in this zone. Now, because it's creating a fair value gap, it shows that price is energetic because it is creating more liquidity in the market. Price is moving so fast and so energetically and high volume that it's actually struggling to fill orders at this zone just because price has swept past this area of price so quickly. So once we see a fair value gap being created in the move to push for the change of character, we know that this area of liquidity has been respected very well. And once we see a fair value gap being created and then we get a change of character like so, all we want to be seeing next to enter our trade, the last confluence or so, is a retest into this fair value gap. And now this can also be a retest into an order block, as also an order block is also a area of liquidity where price is swept. So we could, let's say price created like a small order block in this zone, and so we had an order block here. We could also be looking to sweep into this order block. But any sign or any confluence that price is tapping into some of this liquidity after the energetic move is very good, and that's what we want to be seeing. Now, a retest is very simply, we want to be looking for something that shows it's retesting off this fair value gap. Now, that can be any form of rejection. Now, a rejection in my eyes is one of three things. Now, one of these things is a wicked candle or a hammer candle. Now, what this shows very simply is it's basically a candle that looks like a hammer or has a long wick like this area down here. And it shows, let's say we had our fair value gap down here like so. Price came down into this fair value gap, was at one point all the way down here, but this fair value gap was so strong it pushed price all the way back up to this area. So this shows good rejection. Or it doesn't even have to be a shape of a hammer, like this isn't really a hammer, but we see wicks down here, and these wicks show that price was once down here in this area, but it pushed it all the way back up to where the candle closed. So that shows good rejection. The next thing, or the next rejection I want to see, is an engulfing candle. So this is very simply just a candle that where we have our, let's say, our order block down in this zone. We had a bearish candle like so in this, pushing it down into this area. Then the next candle, the very next candle next to it was a candle in the opposite direction, so a bullish candle that completely engulfs the bearish candle next to it. So it is bigger than the bearish candle and it engulfs it. And this shows a good change in momentum because price now has more volume for the buys than it did for the sells. And then the last sort of a rejection we want to see is just a high volume candle. And this very simply is just a candle that is fat like so. And let's say we had our fair value gap down at this area like so. Once we see a high volume candle reject off this fair value gap, we know that that is a good sign that the fair value gap is being respected. So very simply, price comes back down into our fair value gap. Let's say gives us a hammer candle rejection like so. At that point, on the close of the hammer candle, we'd go for our bullish position. Our stop loss would be just below the low of a liquidity sweep, and then we just target another major area of liquidity. So let's say price had a 1 hour area of liquidity up here, so we had resting liquidity above this high. We would then target this high, and we'd have a beautiful, let's say 1 to 3 our risk to reward ratio trade. So that is our complete strategy. So now we hopefully understand it. Let's go back into our Euro USD real life example and see how we would trade that. So this is our example on the Euro USD. And as you see, this black line is our 1 hour liquidity sweep and where our liquidity is. So now we want to see price sweep it, where we swept it here, came back up, but then we managed to sweep it even more. And once we get to this area, we're quite deep in the liquidity zone. So this would be a good area to think, okay, finally price is respecting this liquidity. So we came back up here. We had some wicks that would show us, giving us little previous highs that we broke, and we broke it all. And we showed very energetic moves. We also swept liquidity here, and you can say, oh, why did this example not work? Well, as you can see, this wasn't very energetic. We had a few bullish candles, but we had 1, 2, 3, 4, 5, 6. 6 candles only took us to this 1 point up here, but one bearish candle took us from all the way up here to all the way down here. So in one bearish candle, it took us 7 bullish candles to get back up to nearly the same area. So this was, I would not call this energetic. So this is why we wouldn't trade anywhere here, because price was not energetic enough. But as we come down to here, and we see price swept it even more down into this area, we see price swept deeper into this liquidity zone. So we're still sweeping liquidity, but then straight away we get an engulfing candle off this liquidity sweep. We get some high volume candles like so, and price comes all the way back up here. And we have some previous high candles like so, which we can see almost as mini change of characters. So we do see our confluence of a change of character up here. We also break above this high of this candle here, as in this area, which is also another change of character. So once we see our change of characters like so, the next thing we want to see is our retest. We actually do have an order block in this area, fair value gaps below this area, order blocks here, but we came and retested into this order block, which is this bearish candle like so. So this will be our order block, and into our order block you see we get a wicked candle, or like a doji candle like so, showing retest off this order block. We'd go for our long position like so on this doji candle, stops just below the low of the liquidity sweep like so, and we target a next major area of liquidity like so. And this would very much just be one of these previous highs up here like so. Let's say we just target this first high, and as you see, price smashed our take profit, a 1 to 3.7 risk to reward ratio trade. And as you see, if we zoom out even more, price could have gone to up here, so we could have targeted like a 1 to 11 trade if we targeted this major high or these major highs, but that would have taken us a lot longer. But we can just target a 1 to 4 trade like so and get this done in an hour or so. So that is how exactly you can use this strategy in real life. Now, if you like how I teach and you want to learn more about me and also how I trade and more in-depth videos, I do actually have my bootcamp linked in the description. This is my private paid course where I have hours and hours of videos going deep into my strategy, into my risk management, into my psychology, how I trade, like everything down to the T. So if you're really interested in learning how to trade and you want to learn how to trade properly, quickly, and also get personal feedback by me where you can send me your trades and want me to analyze it and see how you've been trading right and what you've been trading wrong, you can sign up for that, which is the link in the description. This is for the serious traders who really want to speed their journey into trading profitably. But other than that, join my Discord, top link in the description, where I post all my trades live as they happen. And other than that, I'll see you in the next one. Peace.